Okay, so the last subhead under profitability ratio, not the last one, it's the fourth subhead under profitability ratio. It is net profit ratio, and the formula is net profit after tax divided by net sales into 100. Now, how to get net profit? We already discussed the balance sheet, P&L format, where we have to add all incomes less all expenses. What we get is net profit. So with gross profit, just think of the format of P&L, the credit side, you have to add all incomes. When you want to compute operating profit, what you have to add back is only operating incomes. Now when you compute net profit, you can add operating and non-operating income. So you don't have to categorize this as operating and non-operating, and less all expenses, operating and non-operating expense. This is what we are doing in your P&L. With gross profit, add all incomes, both operating and non-operating, less all expenses, that is operating and non-operating expenses. If you have to compute operating profit, what's the difference? Just add operating incomes less operating expenses. That's the difference. We'll work out illustration 118. Net profit ratio is what you have to compute. So net profit by net sales into 100, that's net profit after tax. Okay, do we have net profit in the question? Net profit is not directly given, so you will have to compute net profit. And the items given here is gross profit, salary and wages, advertisement expenses, interest and rent. Interest, if nothing is mentioned, that must be taken as interest paid, and the other one is income that you receive. That's the interest you received. If nothing is mentioned, interest will be interest paid. Okay, so net profit is equal to gross profit is 2 lakhs plus add all incomes. You don't have to think whether it is operating or non-operating. Add all incomes. Here we have only rental income, then less all expenses. We have salary and wages. We have advertisement expense. There is one more item, interest. Interest, nothing is mentioned, means it's interest paid. So net profit is 2 lakhs. Next, what we need is net sales figure. That's also not directly given. Okay, net sales is directly given. That is written as revenue from operations 5 lakhs. So you just have to directly apply the formula now. Net profit ratio will be equal to rupees 2 lakhs divided by net sales is 5 lakhs into 100. So that is 40%. So we got net profit ratio. Next, we'll work out illustration 119. Revenue from operations given, gross profit ratio is given, operating ratio, non-operating expense, non-operating incomes, and you have to compute net profit ratio. There is a relation between operating ratio, that is your second subhead, and operating profit ratio. That is, if you add these two, this is the cost element, this is the profit element we are analyzing. If you add these two, that will be equal to 100%. Operating ratio, that will be expressed in percentage. So operating ratio plus operating profit ratio, what you get is 100%. Suppose in the question 25% is given as operating ratio. Then you are asked to compute operating profit ratio. Should we apply this operating profit formula like operating profit divided by net sales into 100? No need. What you have to do is just take the balance, because the total of these two is 100. So now operating profit ratio will be 75%. So what you have to remember is operating ratio plus operating profit ratio is equal to 100%. In this question, we need to apply this. We have operating ratio in the question 90%. Operating ratio is given in the question as 90%. So automatically what will be operating profit ratio? Operating profit ratio will be 10%. Directly we got that. No need to apply any formula. Then non-operating expenses, non-operating incomes, we have to compute the net profit ratio. Repeat the formula for net profit ratio. That is equal to net profit divided by net sales into 100. Net profit is not directly given. Net sales is given. That is revenue from operations 8 lakhs is given. Net profit is not directly given. So we have to compute the net profit from the given information. Operating, this is the operating profit ratio. So operating profit ratio is 10%. So net profit, if you have the operating profit, how will you compute net profit? This is the operating profit, not gross profit. With operating profit, you have to add all non-operating incomes. Why we are not adding operating incomes? Operating incomes already included in this. So with that you add all non-operating incomes less all non-operating expense. What you get will be net profit. But we don't have this figure. Instead of that, ratio is given. So that formula we'll write. Operating profit ratio is equal to operating profit divided by net sales into 100. So operating profit divided by net sales into 100, and that ratio we have as 10 or 10 by 100, 10%. Operating profit is missing. Net sales is 8 lakhs given in the question. So operating profit will be equal to 8 lakhs into 10 divided by 100. Now your operating profit will be equal to rupees 80,000. That is 8 lakhs into 10 by 100. Okay, we got operating profit. Now we can compute net profit. Add all non-operating incomes less all non-operating expenses. So here directly it is given non-operating income 44,000, non-operating expenses 4,000. So we'll be getting net profit as rupees 1,20,000. Now you can get the ratio 1,20,000 divided by revenue from operations or net sales is 8 lakhs into 100, that is 15. That is to be expressed in percentage. Okay, the last subhead under profitability ratio is return on capital employed. Or it is also termed as return on investment. Can be written as ROI, return on investment, or return on capital employed. Capital employed, we know this term we have discussed in solvency ratios. Capital that is used in the business. So how can we raise capital? Two major sources. One is owner will have to invest, that is owner's fund. And if that is not enough, we'll borrow, that is called your debt or borrowings. So capital employed formula, this already we have written. Equity or owner's fund or shareholder's fund plus debt. Capital employed is debt plus equity. And the formula to compute return on investment or return on capital employed is equal to, this ratio is equal to net profit before interest, tax and dividend divided by capital employed into 100. So we are analyzing whether we got adequate profit on the capital that is used in the business. You would have invested some capital in the business, on that whether you have earned enough profit. So this ratio analyzes the relation between net profit and capital employed. We'll work out illustration number 122, where you have net profit after interest and tax. Tax is given. What we need is before interest and tax, so you will have to add back. like in one question that we did for solvency ratios. Then fixed assets, long-term investments, current assets, equity share capital, preference share capital, okay, current liabilities and all. You have to get return on capital employed or it is return on investment. Both are same. On investment, what are you earning? And the formula is net profit before interest, tax and dividend divided by capital employed into 100. And do we have the figures directly in the question? We don't have any net profit before interest and tax. We don't have capital employed also. Capital employed formula we discussed, it is debt plus equity. That is first two sections of your liability section. Balance sheet first two section is equity and debt. Debt means the long-term debt or the non-current liabilities. So here debt we have 4 rupees 4 lakhs and equity we have, equity means shareholders fund, that is share capital plus reserves and surplus. Here we have share capital, both equity and preference, both you have to take 50,000 plus 50,000. Then reserves and surplus is given 4 rupees 1 lakh. So altogether your capital employed will be now equal to rupees 6 lakh. So we got the denominator. We need net profit before interest, tax and dividend. What we have is net profit after interest and tax. So you will have to add back two items to get before figure, because dividend is not there. So you have to add back tax and interest also. So net profit before interest and tax will be equal to, you will add back tax and interest, that is with 1,20,000 you have to add back tax of 1,20,000 and you have to add back interest. Interest here you have to take 12% debentures, that is the interest given. Other than that, in the question you have 10% preference share capital, but preference shares on that return is called dividend, it is not interest. So that 10% is the dividend rate given. Don't go and compute it as interest. Interest means interest on borrowings, debentures. So on preference shares or on equity shares, we call the return as dividend, not interest. So here interest means 12% on 4 lakhs, that is rupees 48,000. So altogether your net profit before interest and tax will be equal to 2,88,000. So we got net profit before interest and tax also. Now we can directly apply this formula. Return on capital employed or return on investment is equal to net profit before interest and tax 2,88,000. What was your capital employed? Capital employed is 6 lakhs into 100. So that is 48%. Okay, so with this all 4 category of ratios are over in this chapter. So the first category of ratios, liquid ratio. The second one is solvency ratio. Third is turnover. The last one is profitability ratios. Again, we have subheads under all these. So we finished all subheads. With this return on investment, this chapter is over.